All right, let's kick it off. Good morning, everyone. There's more people joining. Welcome. Okay, let's start. Good morning, everyone. Glad to have you here early in the morning. Thank you for coming. Today we talk about strategic investors. You saw that there's also other workshops on regular financing, equity financing rounds. We've done that in the past, and at some point we started talking about strategic investors because it's a topic that's extremely relevant, that can, a lot of founders, once you're confronted for the first time with a term sheet of a strategic investor, it can be a bit overwhelming and hard to spot the important elements. And I mean, speaking for myself or for all of us, not sure, but for me, negotiating deals with strategic investors is one of the most fun but also challenging types of work, especially compared to negotiating regular financing only deals. I'm here today. My name is Dario, by the way, working with Carrard in Zurich. I'm here with my lovely colleagues, Luana, also a partner in Zurich, and Max from our Lausanne office. We will not waste too much time on talking who we are. We're a large law firm. We have a very established venture capital practice. We advise a lot of technology startups, scale-ups, and also venture investors, and including corporate venture investors, of course, which makes us one of the, if not the most active team or firm for venture investments and startup work in Switzerland and in the DACH area. Luana, what are we going to do today?
Thank you, Dario. Well, first, we want to share why we're talking about strategic investor. Dario already touched upon that. We want to explain shortly what are strategic investors so that everyone is on the same level, the benefits of strategic investors, and then the main part of our discussion should be we're going to do a mock where we negotiate the different terms. And I think this should be as interactive as possible, so be ready to think about arguments and helping us here. And then we're going to do a Q&A session and wrap up at the end.
Actually, if you have questions in between, just raise your hands or just interrupt us. So let's make it interactive.
Absolutely. So why talk about strategic investors? Before delving into the details, let's have a look at some data. So the market today, as you can see on this PitchBook data, PitchBook graphic, is looking upwards again compared to after 21 and 22. However, what we see is that capital is available. However, financing rounds are taking longer, diligence takes longer, and startups are increasingly expected to show commercial traction and kind of a growth path. This tougher fundraising environment is also one of the reasons strategic investors become more relevant. So looking at this graph, you see that non-traditional investor participation continues to be high, and there was less of a decrease in the years after 22 and 23. Non-traditional investors here incorporate CVCs and corporate investors, so not only strategic investors.
I wonder if we have any real-life experience of that, like subjective feeling. I don't know if there's investors or founders in the room that have been in the game for a couple of years. I mean, we observed that after COVID, I think a lot of strategic or big corporates, they're sometimes entirely dropped their strategic venture investments activities. And then, as we just saw, it's picking up again. Are there any subjective observations? I don't know, Nicola, if I may call you out. ZKB, you do a lot of co-investments. Do you see more or less or same amount of strategic co-investors or leads?
In recent deals, we've seen, I would say, quite some strategic investors. For me, and thank you so much. In recent deals, we've seen quite a lot of strategic investors joining the cap tables. For me, a very relevant question for today would be, when is the right moment for a startup to onboard a strategic investor. I see them often already in seed rounds. That's an observation. And I would say 2 years ago, they joined maybe in Series A or Series B rounds. And for me, that's a relevant question, does that make sense?
Absolutely. Thanks a lot. We will get to this in a few minutes, and then let's get back to this timing question. Yeah, thanks a lot. I mean, we do substantial work again with strategic investors, so I think there's a clear signs that activity has increased again. Not backwards. So what's a strategic investor is a slightly provocative but also obvious a question with an obvious answer. Is any big corporate that invests into startup companies a strategic investor? Not necessarily, would be the answer, I guess. Potentially, or chances are high that there's some strategic element in it, but of course also you can be a large company with the necessary funds available to do venture capital investments, but only for financial purposes. And then arguably you would not qualify as a strategic investor. Theoretically, a strategic investor could even be a private individual, although that would be a bit strange to see, because then what's your strategic goal there? So it's usually large companies, corporations in a certain industry that aim for a certain purpose with their investment that often goes beyond just financial returns. How is this done? I mean, we have some real veterans or experts here also in the first row who have done it very early on, who know everything about this. Of course, as a big corporate, you can invest directly off balance sheet. So, your startup investment would simply be another asset position. There's pros and cons, and that really depends on the specific strategy, financial strategy of the respective investor. What we see more often is there's some type of special vehicle, so an investment fund, a venture fund of, a healthcare company or whatever. They wouldn't typically invest directly off balance sheet, but rather mount a certain vehicle. And in that vehicle, often it's only them investing, so you really them using it to invest into startups. But what is sometimes also done is that this vehicle would then be open to third parties to also join along with the originally investing company. So there's different models. We see a bit of everything. Sometimes we also help corporates setting up their inaugural vehicle or construct, and often it goes wrong. It's really hard as a big company to find the right way to do these things, but it's a super interesting topic to structure this. Maybe a question to the audience: what could be a reason that a big corporation invests into startups in the first place? To earn money, for sure, yeah, diversification, and just go into this asset.
Sell the company to earn money afterwards.
You're saying to sell the company?
To scale.
To scale the company.
To scale the startup.
To scale the current.
More revenue of it.
Which is hard for as long as you're just a minority investor, right? Because you're in a passive position. But maybe later on you want to have some chance to take over the whole thing and then further scale it. Yes.
Get innovation.
Yes.
To buy innovation.
Absolutely. Why wouldn't you do it yourself as a large company? You have the funds.
Well, the risk is too high, and you need also the experts. And also, like the channels in big companies are much longer, and they are not so they are not able to scale it that fast as a startup.
Absolutely.
I think we talk about also corporate investors, and there are two different types of corporate investors. The ones which really, as I said, want to earn money. The corporate venture fund I worked with was clearly separated from the company. We had a firewall, and people could give their business plans to us without fearing that we'd hand them over to the divisions, right? And some others are strategic with sort of the view of later acquiring the company. And I think this is really dangerous because everybody knows that the exit always is better if there is competition. And some exit partners might shy away from a company where already one sort of has a first right of refusal. And I think that's really the most important topic, to separate the money investment and the second thought purpose they have.
Thank you very much. Absolutely. And it touches also on the timing question again, right? The earlier the strategic investor comes in, the more cautious the startup needs to be, arguably, to make sure there's no handcuffs that come with the investment. And it's particularly interesting to hear this from you as a former corporate investor saying, hey, this should stay entirely different because it's dangerous for startups. Usually one would assume that, you try to...
Not all corporates have this philosophy.
Yeah, absolutely. Yeah. Thank you so much. I think you named all the most obvious reasons already. Making financial returns, obviously, outsourcing of R&D spending, so you can either mount it inside the company or buy it in and have the startup do the work for you if you have certain control over it and ultimately can benefit from it. And then the innovator's dilemma, it's usually known as the dilemma where as a corporate company, let's take, I don't know, Rolex as a random example. You're in a certain market segment, you have your customer base that has certain expectations towards you, right? They just want to top-notch watches at a certain price with a certain quality. They don't want you necessarily to now go play around in, innovating and try new stuff. And so really they just want you to leave them alone. And so even though you may have the means to innovate, the people, the resources, it's just not possible because you're locked into a certain market segment with certain customers. So then it may make sense to resort to investing into startups or collaborating with startups to outsource again R&D. Very briefly, amounts invested of strategic investors back in the days, there was it was said a lot that they would generally, they have deep pockets, so they invest large amounts. This can be the case. I think we see a bit of everything. Sometimes they join rounds with smaller tickets just to, get a glimpse and see how the company is doing, to maybe later on do larger follow-on tickets. Point in time, I would agree with Nicola that we see a lot of early strategic activity as early as the first equity round. Back in the days, I think it was more classical that they would come in at the Series A or maybe Series B stage, where you really have a better picture already where the company is going, and a clear path towards what could be the joint strategy for the future. So I think it has actually changed and shifted forward a little bit. Often it comes with joint commercial requests, or almost always, right? So as a strategic investor, I invest into startups, and of course I want to understand, can we actually work together? Is there synergies? So I may want to push for a commercial collaboration early on. We'll get to this also as part of the negotiation later on. One key element, actually, I'll leave it to you. You're talking about this, about the benefits of, the timeline. So maybe the last one to touch on, back in the days, it was often said that strategic investors may be willing to pay a strategic premium. Basically, they say, hey, I can come in early with certain special asks as compared to a merely financial investor. And I'm willing then, in exchange, to pay maybe a slightly higher valuation because I get something out of this. And then it was funny, is that at the last workshop, someone said, well, no, isn't the opposite true? Because I come in as a corporate or strategic investor, I offer you something that others can't, so I want a discount. So I think there's no right or wrong here. I don't know how you approached with the valuations back then. Like, would you just go with whatever the financial investors would negotiate, or is there a special approach as a strategic investor?
Yeah, I think this is critical. I would say you should have like two egos, right? One is the investor, and that should be treated like a financial investor with the same evaluation and so on. And then separate, there can be a contract which should not be linked to the investment. I think that would be the pure corporate governance, I think.
And valuation-wise, was it very political inside the fund?
I'm
or
not
is it-
aware
Yeah.
of a case where there was a different valuation for strategic versus regular.
I mean, it's aligned with what we see, because usually it's kind of rare that the strategic investor would do a lead early on. So often they join as co-investors, and then you're exposed to the valuation of the other parties anyways. Max,
Yeah,
so what's the beauty of having a strategic investor?
Well, he's there. Well, we touched a few of the points already, but I'm happy to hear your thoughts also. Today I'm going to represent, when we negotiate the terms, the founder. So I'm going to try to figure out what would be the benefits of having a strategic investor from the company's perspective, right? And if I were to sum it up, first one is probably market validation, or actually your ideas make sense. You have a strategic investors coming on board, you're just showing the market that, well, what you're building is actually making sense to everyone. So that would probably be one of the benefits. The second that I would see from the startup perspective is that indeed we discussed the timeline of investment. A typical VC have a lifespan of 5 to 10 years and has to go for a very specific time frame for the exit, because this is the financial return expected, where your strategic investor may give you a bit more longer time frame here and more aligned with your actual potential in terms of time frame, which could be a benefit that I would see as onboarding a strategic investor in a startup. The other point is probably that, even though we can probably argue around the valuation, probably that the VC typical financial investor would be very, very much discussing the financial terms, where you could try to obtain better valuation. Is it a good idea? That's a question. From the startup perspective, saying, well, you don't really care about the pure financial returns. You have many other returns directly as innovation, IP, whatever you will get through us. So maybe strategic investor could be a bit more fine with negotiating higher valuation. And well, the fourth point we would see probably, even though we have listed a bit more, is access to market. You have a big corp helping you access markets, full power. So a lot of money, probably capacity to invest in the future and help you build your product if your market fits, and going further and developing the company. So indeed, developing that. Would you see other?
I mean, that requires actually, when we talk about keeping the investment arm entirely separate, or even with Chinese walls, that would require that there's a connection, and that the investment part of the corporate actually can tell the company, hey, we have this investment now go help this company, and give them everything they need.
It's always also been something that startups could show as well. We have strategic investors interested. It shows that even though we may lack some market signals already for financial investors, showing that there is a need for what we're building, so it makes sense to invest. Yeah, indeed also. Do you see any other benefits here? Because I'm avoiding on purpose the bad aspects of having the investors on board. That's strategical, but bad. Not necessarily bad, but to be careful of. Well, I think this is the main.
And these are super important. Sometimes we often act also on founder side, representing their interests, and the natural reaction first is when they approach us with a term sheet from a strategic investor. We raise all the flags. It's like, hey, come talk to me, because there's a lot of stuff hidden that you may overlook in your enthusiasm to now start working with this large industry company. So naturally, we tend to just raise flags and point them to pitfalls. And sometimes it's forgotten that actually there's a lot of benefit in working with a strategic investor if it's done right.
Yeah. Well, perfect. So I think
I lost it.
I stole it from you.
All right, let's get into the battle.
I need your help. I'm going to be the founder, so I'm in the weaker point here. So I need help in managing my negotiation here. So please help me.
And I'm going to be the investor, so I hear a lot of negative voices, so please help me as well.
I want to win this battle of negotiations. Yeah.
So we're not going to divide the room because we don't know with which side you will be sympathizing. Just chime in whenever you want to help out one of the two. This is a term sheet that we put together. Just I don't know if the slides will be shared or actually the session is recorded. Just please don't ever use this term sheet in real life because some of the terms are quite ridiculously leaning towards one or the other side. So this is not a good basis to work with. Just as a little usual lawyer's disclaimer. All right, we have a first term that we find in the term sheet. Luana, what did you try to sneak in there?
Yes. So I'm the strategic investor, and I'm investing as part of a Series A round. And what I imagine is that we have a board of 5 directors. I leave you 2 founder directors because you're the founders and you're important to be on a board. Then the existing shareholders or investors should have 1 seat. Director, and I want to also be on the board with a director. And I thought of 1 independent director, which is appointed by all other directors. What do you think about that?
Well, what do you think? Thanks. The composition of 5 members seems okay to me, but I have an amazing lawyer, actually, Dario. He gives very great advices all the time, and he told me, well, never give a board seat to any strategic investors. It's simply a pure no. They would have access to strategical discussion. So, well, can we...
No, but I'm investing because I want to be part of the board and I want to be informed. And I mean, under Swiss law, there are fiduciary duties. It's very clear what the limits are and what we can do. And yeah.
Can we limit that to board observer then, at least? You would have the information somehow.
No, because I want to have a say. I'm investing a lot of money and we want to be involved. And observer, I just observe. We should be part of the discussion. We can help. We can actually add value.
Well, I would need you out of any strategical decisions then.
Well,
define strategic decisions.
Well, this is our job to define. I'm just saying I will carve out many decisions
we're investing
of what you
because we're currently investing because we want to we believe in the strategy. If you change it, I would not be investing, and I would want to have a veto to any significant strategy changes, because otherwise we would not invest.
No, okay, but you would need to be out of whatever would be conflicting with your personal interest then, at least.
Yeah, that's covered by the fiduciary duties of the board under Swiss law.
Okay, so we could probably agree to that. Then I think we should push back and see what happens with the vetoes. Would you help me with the negotiation a bit here?
I like to address the strategic investor, and I appreciate all you bring according to the slide before, right? All the positive things. But for me, to have a strategic investor on the board is a no-go. And I tell you why. Because, and this may depend a little bit on the situation, but in a situation, the ultimate goal might be to merge the 2 companies, right? And I think you will have a tremendous conflict of interest. You know, as a board member, you're responsible to work to operate in the best interest of this company, and as a strategic investor, you have the same for your company, and that's why I think you can't be on the board. Sorry.
Thanks so much for being here for me. It helped a lot.
Just to make it worse for Luana, I have a question. So if you're on the board and you talked about fiduciary duties towards the company, right?
Yeah.
That's the Totschlag argument, I would argue. It is there as a legal concept, but in real life, how do you separate? I mean, you get information from the company, board information with strategically relevant details. Also, you're working with your company as a shareholder. Do you actually go and say, okay, can I read this? Okay, I read this as a board member. Now I don't know it. Now I work in my capacity as a shareholder. How would you give Max comfort that this actually works in real life.
Well,
hard.
I do see that people can wear several hats, and one option is like, I want a right to nominate a director. Is it an employee of mine? I don't know yet. I have access to a variety of experts and people which are very, very good in the field and can add value, and kind of also I'm confident with that they will guide the company into the right direction. If I feel that there is a conflict with one of our existing employees that would be on the board, that would be a valuable alternative, and I think they really can add value. And ultimately, of course, if you're part of a corporation and sitting on the board, you need to wear two hats, and you need to think about what you can share and what not. Ultimately, I see limited amount of risk, but of course, also within we do have certain Chinese walls and limited information flow to ensure that's kind of covered. Yeah.
I think it's we often have this discussion, and then everyone points to the Treuepflicht and like, okay, let's do it anyways. But ultimately, it's trust-based anyways, because if something goes wrong and information is leaked, then that's gonna happen anyways, and everyone needs to deal with it. So no matter what you put in the shareholders agreement, like how to guide flow of information and where to block it, it's only a contract in the end. Yeah. Okay, let's talk veto.
Let's assume that I've agreed to the board seat, but what I could see also, as exactly as you said, for the founder's perspective, maybe I could see fit of having industry experts at the board level, especially early stages where you lack good board capacities. And this would be probably the main argument that I would have taken as founder, saying, well, you need some industry experts, and if we come as early as we do now, a strategic investor, you need us at the board level to actually make some good strategical decision immediately. So yeah, let's assume I've agreed to this. Well, but thanks for the help. Vetoes.
Yeah, next
Veto
one.
now.
Vetoes. I mean, there are just like some points which are very, very important. We're giving you a large check, and I really want to make sure that the company doesn't like just simply change strategy. So I really want to have a veto right on a board level as well as on a shareholder level.
Yeah.
Yeah.
I hate the term market standard because one fits all size doesn't really work. So even though it would be a better argument here to having, well, it's normal to have important board matters. Well, you have everything in my business plan. The markets, the verticals, everything. So why should I give you veto rights on that? I would miss on the full potential of my company.
Well, I agree, and I like your business plan, but what if you want to change it? I think I should get a veto there. Do you agree?
I agree that I might want to change and pivot, indeed, yeah.
Well, that's not why I'm investing in you. I believe in the future of your current business plan. So I think I should have at least a veto or a say if you decide to tackle something else.
The only part where I could agree to that is if I leave a vertical or market that is essential to you. But any new market or any development that you already know of cannot be vetoed.
Yeah, I agree to that. If I'm aware of it, then I'm fine with it. That's I would just want to have a veto if there is a significant change or a material change.
Yeah, we will need to define that quite clearly in the list, but...
Agree. Yeah. Our lawyers can fight over that.
Dario will be helpful. What do you think? Should I agree to veto rights? To at least leaving certain verticals, or is that fine? But
So you're forever stuck in Luana's industry, if she wants you to continue there, which, I mean, do you want to waste resources there, even though you've decided already that another vertical may be better for you?
Well, do you want my money or not?
well, best argument I could have heard so far. No, indeed, I thanks for the help. Legacy products are also a company's killer. Something that should be moved out from and remains just because of one of the initial investors is a nightmare. Committing half of my team to managing a vertical that makes no use for the actual potential of the company makes no sense.
I don't see myself as nightmare. I see myself as opportunity.
Would you see on what we should agree here?
Well, I think that's the definition of the conflict of interest. interest.
Mm.
You've just demonstrated that you're at a conflict of interest. Because if it's in the interest of the company to pivot and change the business plan, you're saying, well, I'm going to say no. But you've just said that you were willing to agree and to abide by fiduciary duties. And you've just demonstrated that you were in a conflict of interest.
Is it going to be you on the board, or are you going to send someone else?
That's still to be defined.
That's a
But I
question you
mean-
should understand.
Changing
You wanna know who
fundamental
is coming on the board.
strategies, I mean, that should be a shareholder decision anyways of the company. So matter of a shareholder veto where I'm not subject to any fiduciary duties, so.
Good answer, huh? Yeah, I have to agree.
All right, I think we actually have an exemplary list of what such veto rights actually could be. I mean, this is a let's not call it market standard, but if you found a VC that leads around, these are typical things that you find in a veto catalog, where
At board level, yeah.
board decisions can be blocked by the respective lead investor. And here, yeah, of course, when the lead investor or a co-investor is a strategic investor, you have to be super careful and really ponder and contemplate all of these, how comfortable you would feel having someone potentially block these decisions.
So yeah, if we get back to your...
Vetoes, they are all related to decisions of the board, not something.
No, shareholders as well, you can have them on 2 level.
At shareholders level, it's very rare that one single investor has a
Yeah.
veto. Usually you work with thresholds.
And when you talk shareholders level, you're discussing like very, very broad decisions for the company, such as liquidation, such as changing the actual purpose of the company. So all of that, well, is another topic of the actual market and execution of the business plan to a certain extent. So I believe that indeed the main discussion would occur at the board level vetoes than shareholders, but still questions arise there also, yeah.
But in general, would you accept a veto right on board level to one specific person, or would you rather advise to have it at least one founder director needs to approve or something like that? Because I always think it's not, I am very dependent on one single person or one single institution.
Fully agreed. It depends. Well, difficult to answer in general terms, but help me there. The structure will change everything. If you've lost the majority of the board members or the absolute majority as founders, you may want to say that at veto level for the board, if there is a veto from the investors, then at least a veto from the founders also exists. So at least you have like a balance here. And then if you have several investors, that what you could usually see is with the approval of one of the investor directors. So it's not a veto of one person, it's at least you need to convince one of the 2 investors. So that would probably help if you have a financial investor, strategic investor, go to the right one when you discuss something that could be vetoed. That would probably be helpful from founder perspective again. On the other side, strategic investor may say, well, I really need to be able to avoid you leaving why I invested in the first place.
Yeah,
How
so
do we
me as
solve
a
that?
strategic investor, I will look at the cap table and see whether my interests align with the seed investor. I know him, whether I like him, to think whether I give in at that point and just say one of the investor directors.
This is super interesting coming from you as someone who does a lot of co-investments, right? So in each and every investment, you really have to, just trust whoever that person is that has veto rights at the board, who is also co-representing you, but you may just not know them and know how they act, yeah?
I have less of a problem if this is a financial investor because
Mm.
I see that the interests very aligned.
Yeah.
But I have more of a problem if it is a strategic investor.
Absolutely, yeah. What you could also see sometimes is different lists of vetoes, possibilities with different levels that I see sometimes. So you would have a large list which is agreeable to everyone with one of the investors' directors, so that at least you have this full list. And then for these specific decisions, which will be a trigger point for the strategic, or this will be a trigger point, this requires the actual approval of one of them, and this would be where the heart of the negotiation will lie, which is sometimes very hard because that could be very much conflicted indeed. Other way is to probably prevent certain people to access board information at board level. So even though you have a right, you cannot nominate people that would be too much involved in your daily operation. So they will keep the actual practical focus on the interest of the company itself and not the investor, which is the supposed behavior of a board member. But as you said, in practice, well, you cannot be like that schizophrenic, right? So maybe just limiting the scope and say, well, okay, you can appoint someone, but this person has to be approved by the founders, which consent cannot be unreasonably withheld. Well, great, doesn't say anything, but at least if you have strong arguments saying, well, you're too much involved in your daily operations of the strategic investor, you cannot be at the board level, and then your fiduciary duties limit you and prevent you from transferring all the information, that would be a way of building the board with this very specific scope. So, well, very hard to be exactly spot on, but that would be probably a big point of negotiation, structuring who can access and watch veto, yeah.
There is the option to include a veto right on the shareholder level in the statutes. Do you work with that in practice, or something you would never do?
In the Articles of Association?
Yeah, exactly.
That's very restrictively possible to have specific veto rights on a shareholder level.
When you usually have the shareholders agreement, which prevails anyway, so you would not even care about the articles usually. And
the articles are publicly available. Whenever you kind of need to change them, you need to file another deed. So yeah, and also there are limits as to what you can do in the articles, because there are clear board duties and shareholder duties. You can increase thresholds, yes, for majority decisions, which you sometimes see. But I mean, the question is whether you want to go through that effort and update them every time you have a financing round. So, I mean, if I'm an investor and I'm very keen on having that on a corporate level, I would ask for it. But I would say that current market standard is that you have it in the shareholders agreement and you're fine.
And the single investor shouldn't have a veto at the shareholders level.
Yeah.
I agree. So, time is advancing. I suggest we go quickly very quickly to the right of first refusal. What's your term that you want, Luana, here?
Well, I want to have a right of first refusal with respect to any sale, license, spin-off, and disposition of your assets, Max, to any third party, and any sale of the majority of the shares in the company. You know, I'm investing because I think you're the future, and I'm giving you a light at the end of the tunnel. I'm giving you...
Oh, so we're getting emotional now, if I should agree with this.
I'm giving you an exit opportunity because my goal is to buy you. You get the freedom and you get my money to like operate. And ultimately, that's my goal. So that's why I invest and that's why I believe in you.
Well, agreed then. No, kidding. No way. No, I cannot accept that. I mean, there's no way I could have any optionality on the exit points, and no one will actually even start looking at us if there is your capacity to jump in at any
You
time.
don't need anyone to look at you because you already have the best possible exit partner.
And then buy him now.
Yeah.
Put the money on the table.
Let's discuss
No.
sales then. Yeah, indeed.
Currently, you and I both know that you're not at this stage, and I mean, imagine what I will pay to you in some years. Now I'm
What
giving
you
a
won't,
little check.
because nothing will actually be helpful to actually manage the valuation at that point. What I could see, because I'm going to make a step towards you. What about a right of first offer? Very short time frame to answer as soon as I'm looking for an exit possibility or someone shows interest. Very short timing for you to discuss that.
What does it mean?
Well, I let our kind of, because you know I'm a big corporate, so I need time. We need time.
But that's
We
the
need to
problem.
get the money. We need to think about it. We need, I mean, internal processes, they just take time. I think I could live with the right of first offer, but what I would be really worried about is then if you go out to the market and approach our competitors. So I would still need a right of first refusal if you kind of are looking at competitors selling to a competitor.
To answer your question, the right of first negotiation or offer, you mean here, what would it be? So, well, if I have any sign of interest, so some people, I could probably ask you to check that and counter offer immediately, and we have a very limited time frame to at least discuss the main aspects. If you don't answer, then I can move forward. I just want to keep the capacity of the others to actually invest their time, due diligence, lawyers, financials, and they will not pay that if you can jump in like 3 months after they've started. So this is no way. You have a small time frame, otherwise you're out at least from the right of first something, and then, well, you will be a bidder as the others. and you will pay the company lower than the others. You've already acquired a big percentage of it. So you have your return on investment already. For competitors, can I really restrict myself from going there? Once again, short time frame, but I need the optionality here. Otherwise, I'm sure that no payday will ever occur for the founders, or at least not in the sense I see that. I've already restricted myself for the full potential of the company, so cannot agree to that fully. Would you see other point of negotiation here? Can I agree to that in the first place, even to the right of first offer and negotiations? Difficult. For me, to be honest, and go when you're Series B, you start to see actual signals. You can be a bit better at determining what would be the way of being acquired by the strategic investor. At seed stage, you have like 25,000 options of pivots and market fits. No way you can negotiate the payday. So for me, it's if you come very early, personal perspective, absolute no-go for any right of first refusal for any strategic investors. Later stage, start discussing these kind of things maybe. But I would be happy to hear other thoughts because, well, very difficult. You usually end up discussing the full acquiring of the company quite soon when you touch this topic, because how do you manage the actual exit situation when you have only one person that can actually make an offer? That's no way, as you said.
I think it depends a little bit on the situation, you know, whether there are a number of companies that could acquire you. I think if the mechanism could be like that, that you will independently of her talk to other acquirers and you set a price and so on, and then you can go back to her and say, this guy pays me this price, are you willing to say the same price? Then you have a first right of refusal. I think I could imagine that that could work out.
Yeah.
And just by the way, I have an advice for you, the founder: take more than one strategic investor on board. And this may sound funny, but I have examples where there were, I think, about 5. and that helps you. You don't have to fight; they will fight with each other.
Yeah.
At this point, it's basically just an industry association. Everyone is on board.
A consortium, yeah.
I have a question on that topic because we are also going to have to organize a financial round, and we wonder if we want to approach a strategic investor or not. And we have actually 2 market leaders, and then we don't want to be locked in with one because you can set up all whatever terms that you have. But if they know that you have been invested by the other, then it's already a different situation. And I wonder of asking both to join, how they will feel about this proposal, first of all, and also how it's then working practically then, of having 2 or more than 1 strategic investor in the company.
Well, just as a first thought, but I will leave you also the floor to discuss that as the actual other way of the table, but the side of the table. If you just decide that the company's interests are above all by convention, even though it's not fully true, just this is what we need to work on together, then having different people at the table will actually set a price that it's actual market price. So you will not overpay the company in the end. So that makes sense. And you already have a discount compared to the full price of the company because of your early stage investment. I think you could tend to agree to that and say, well, we'll be market agnostic. You could access different verticals that you would not access by being the only one. So I think that you could try to negotiate that, saying, well, this makes sense for the companies and to get to a market price that reflects the actual price at a point in time. So it makes sense for everyone on board. And we get, best of both worlds with the capacity of each of you. But indeed, difficult to actually manage them because they will have their specific views. But again, what is the actual situation? Why are they investing in the first place? Is it the IP? Is it the company? What are they actually accessing with you? And this will actually answer your question. If the question is, I need to get an access to this IP should be proven as working, having someone else is a fight that they may not want to have. But well, in this case, discuss the sale.
Yeah, no, I think the same, but he just said that having 5 is even better.
Yeah.
So I don't understand exactly.
I mean, I think it's safe to say we barely ever see that. I mean, I've never seen it in my life that you would have 5, let alone, or not even 3. It just gets very tricky. I mean, in this case, certainly no one could block any decisions or have right of first refusal, etc., because then everyone would ask for it, which doesn't work. So I think it should be sort of one big happy family where everyone comes together and sees some benefit in this investment and helping the company for the entire industry. But I think if you come in with a mindset of I need to get a winning edge over my other competitor, then it gets very difficult to get everyone to sign one and the same agreement.
But as you also said, if you take on board the strategic investor very early on, I don't know where stage you are, but they should behave as financial investors for the first part. So refrain from accessing many information, as you said. And in this case, well, this is less of a problem. They're not accessing any of them more information. In practice could be a bit different, so that would probably be something to discuss, but you could probably try to get to that. But well, indeed, very difficult to have everyone on the table agreeing. I mean, I've really never seen it, yeah.
All right, well, time is up. Is it?
Yes,
no,
I think
is
it
it
is.
1 hour?
I don't know.
Or I'm not sure. I
Well,
think it's
anyway, no
3/4
exclusivity.
an hour. You just let us know if we can keep talking.
Yeah.
But basically, the last one that you would want, Luana, is
the license and distribution agreement with market standard. I mean, of course, exclusivity.
Exclusivity, yeah. So even though I would have really strongly pushed back entirely on the intent of it, can we at least limit it geographically in this case, if you really need this exclusivity?
Geographically, yes, but I mean, Germany is really important to us, so it would need to be at least Germany.
Yeah, but basically it's meaning Europe in practice. I mean, no one wants Europe without Germany, right? So again, I would...
So is that a political statement?
Yes, it is. I mean, it's the biggest market here. So no way I can agree to that. Again, same offer as I just did before, same sense. Right of first negotiation. Should anyone, third party, come with an offer with an exclusivity, you have the right of first refusal to take this based on their terms. Otherwise, I cannot agree to full exclusivity.
So if you offer someone else exclusivity, I get it first?
If they offer it or request it, then I have to offer it to you, and you can refuse, and you have to agree to it. Yes, a right of first refusal over this market, this exclusivity.
Yes, I think this is something I can live with. Although what I'm really worried is that you offering exclusivity to some sort of competitor, even if it's not in Germany. So, yeah, and also if you offer it to someone else, you cannot come to me and offer it to me because you already agreed to it once. You can only agree to it once. Yeah. How are you going to deal with that?
Well, if I take the entire structure so far, you have a board level and many veto rights, so you know the markets I'm in. So I really have to strongly push back on any exclusivity here on the license agreement and just offer that you
yeah,
will
but
obtain them when necessary.
if I get the right of first refusal, if you offer it to someone else, or I get it as well.
Well, if they show interest, I have to offer it to you.
The other person?
Before negotiation. I will not sign without you having been offered the possibility to take it before.
Okay.
We need to close this round, guys. You need to find an agreement. Did you agree?
Yes, I think we agree, and otherwise,
Well,
It's running out of money.
I'm
have
agreeing
our
to my
lawyers
last
fight
statement.
to that.
Yeah, okay.
In that case, I will. I think we have an agreement, right? I will send you over our revised term sheet, and
Almost.
I'm looking
Comes with a
forward.
lot of new strategic.
Yeah,
elements.
I'm looking forward to receiving it countersigned.
Yeah, the comments from Dario, my best lawyer. Thanks for the first version of the term sheet, because the 2x liquidation, 2x participating liquidation preference seemed okay. Thanks.
So as we lawyers say, a good deal is when both parties walk out of the room slightly disappointed. That's when you know that everything is probably balanced. This was a lot of fun. Time is up, I think you said. Yeah.
Yes, I
Okay.
think it
That's
is.
too bad. That was a lot of fun. Thank you so much also for actively participating. We didn't get to cover all of the aspects. It was just 3/4 an hour, but I think we got to touch on a lot of really relevant topics. Very important that whether you're on investor side or on startup, on founder side, that you know of these elements and the potential implications, and go talk to your lawyer when you have a term sheet on the table. Latest. Thank you
Yeah.
so much.
Even before. Thanks.